Hi traders and investors, welcome to the weekly gold market update. I'm Dilin, the research strategist at Pepperstone. So market sentiment has shifted significantly from yesterday, with sellers gaining dominance in the gold market. Let's begin by looking at the overall performance of precious metals. We can see all of them are decreasing against US dollar, while the gold is relatively the best performer with 0.8% loss compared with platinum slumped by almost 5%. US dollar rallied yesterday with a 0.7% hike in dollar index caused by the sluggish economic expectations in Eurozone. This makes shorting gold an attractive option. While dominated by US dollar, Euro and Aussie dollar have the biggest loss among other leading G10 currencies, down by 1.8% and 1.5% respectively. So if you are bullish on gold, consider trading against these currencies. Now let's dive into the technical analysis. Looking at the daily chart of gold against the US dollar, we can see the gold has broken through the 50% Fibonacci retracement level from the previous downturn. Sellers have exerted significant pressure, causing the price to drop from the high of 1939 to 1925. Gold is currently finding support around 1926, struggling to stay above the 38.2% level. If it fails to hold, gold could enter a new bearish phase and drop below 1900. The trading range remains relatively narrow, with an average daily range of around 13 points. We will closely monitor this performance. And at the same time, gold against Aussie dollar and euro present a more positive outlook. The former is finding new high last seen back to April, around 30.34, with buyers entering the market, and the latter has ended the sideways pattern lasted for the past 3 months, but the tight range and also sellers are still concerns. So several factors are currently driving the decline in the gold price. Firstly, the treasury yields are so high. The 6 months US treasury return pumped 8 basis points within a day, and there's a comprehensive sell-off across different maturities. The risk-free rate is 4.23% at the moment, and the opportunity cost is quite high for gold investors. And meanwhile, the equity market is in the red, S&P down by 0.5%, although the Nasdaq has experienced a slight 0.1% increase, driven by the anticipation for Apple product launch events next week. Given the strong performance of USD, investors are tending to hold cash to hedge risks. Lastly, high real yield and lower rate cut expectations compared to the previous day are also contributing to the decline in gold prices. So in general, we need to admit that we can see selling pressures in gold market, especially against US dollar, although the data showed some resilience and good signals are observed from fund holdings. However, high real rate and treasury yields are threatening the gold price, while strong US dollar and soft macro data released like less than expected China and Europe PMI, dovish policy statements of other countries, as well as poor equity performance are the more powerful limiting factors behind. So to put it simple, global growth is under pressure and everyone is buying dollar. So in the following days, we should pay attention to US ISM services data at midnight today, with expectations of 52.5 compared with the previous read of 52.7. If the data turns out weaker than 50, it can potentially plunge US dollar and in turn support gold. Later on, we should also keep an eye on ECB speeches and China trade balance on Thursday, where the strong prints can fuel the gold. And the Chinese CPI and PPI data on Saturday morning is also a big event. Strong China and Aussie data can support the gold price as well. So that's all for today. Stay tuned with Pepperstone.